Hi traders! In today's video, we are going to look at the oil market and try to answer the question if the higher oil prices narrative is still strong from a technical point of view. I'll structure the price chart in such a way that you see the price areas where traders might change their positioning from bullish to bearish and vice versa. And then I will show you why the August 16th, so the middle of August, around that date, is a key date to watch for in the oil market. So let's get it. So here we have a daily chart of the West Texas International. I will zoom out a little bit so that we see this bigger picture. Here is the low from 2020, okay, March 2020 low. Then we have the previous price range before that collapse, and we have this ascending channel structure here, layered in other intermediary ascending support lines or resistance lines, organizing this whole ascending pattern that we have here from that low to the recent highs here, one in March this year and then in June. Now, I have a bunch of lines here on the chart. The ascending lines in green and also some descending lines in green. In alternation here with some blue lines. Okay, usually I only adopt one ascending and one descending angle, but in this case we're seeing that if I take the green line descending, these descending lines that were useful in the past because they are organized the price action in the past. If I project it here to the more recent price action, specifically to this top we had in March, then I see that the line got blurred here. Okay, that makes me think that the market is in a stage where it is reacting a little bit different, and we do have another angle here, not as steep as the green one, which is the blue descending line here. This blue line marked this this slightly descending structure here in the beginning, how this low was organized. We see that we have this this pullback here, and then this definite breakout here in the 26 range, more or less, from where the market then went up and never looked back. So we even left there some horizontal support levels that right now will be not considered in this analysis. But from this point, we got a first inclination here, establishing a dynamic support, which then projected into the future, somehow organized the chart. We see that this blue descending line was a line that often during this whole ascending period was often broken out and then retested from the lower side on several occasions. So we might have even here under the latest breakout in February, where we have this last spurt higher, even then the market came lower to retest that level. So we are, and then if we project that line up to this aforementioned highs, and we see that they respond to this line. Okay, so the market might follow these lines in the new descending structure here. So that's why the reason why I left it in both versions on the chart, and in a future video you might see me only using the blue lines for the descending structure. Then we have this horizontal supports. Let me switch here to the weekly chart. That you see let's focus on the horizontal support and resistance work. As mentioned, the lower ones here at 20 somethings, and then we have the high here at 147. This corresponds to the high here in 2008, and then we have an interesting level here. This was the this base building here in September 14th, before the huge breakdown here in prices. That was a target that was accomplished here in January this year, and then the market still went up for another leg higher, but it didn't reach that higher target, the 146.47. Okay, that is the first sign of some lack of strength in the market. But we have another one, which is if we take this line here, this yellow ascending line, we show that projected from this low, the market reached a target here. So where we take this line from, well, we can see that on using or projecting this line or changing this line from place to place here around the chart, we see that this is an angle that the price responds to. So we like to, because this level was so decisive in the market, this 2014 breakdown here, then the narrative that we had in the narrative, or the technical narrative, or the message here, is that any line that goes through or originates from that level will be important for the future development in the price of oil, right? And to start with, we had this horizontal resistance line that was being a horizontal resistance. It corresponds to a fixed price level. It was the 91 level, which the market finally reached here in the beginning of this year. Once a market reaches a target, a technical target in horizontal terms, okay, it reaches a price level that it has targeted in its structure, it will immediately look for other lines, yes, that correspond to that level. Other lines, I mean dynamic lines that correspond to that horizontal price level, okay? Because the message here is the following. This was a capitulation level for oil, right? It lost the 91 level here, and it suffered a lot. It went even negative here in 2020. It suffered a lot to reach that level again. And once it reaches that level again, yeah, it wants to really conquer anything that belongs to that price level. Yeah. So any resistance or support line, in this case resistance, because the market forces were the dominant market forces were ascendant. So it looks for any ascending line that originates or passes through that level. Okay, so this makes this line a target. Okay, so we reached that target here in March, I believe. Okay, this year, and then we had another intent of reaching that line in last month in June, but we failed to do so. This is in itself a bearish omen. So we have the fact that we couldn't hurdle this resistance and reach the 46 level, because in that occasion this would have been spectacular for the price of oil, because once the 147 level would be reached, then the next question for the market would be, what is the next ascending dynamic resistance belonging to this historic high, right? We have this happening in all markets. We saw the same dynamics in our recent video on Bitcoin. The same evolution in its price. Okay, and very similar. We have it here in the price of oil again. Okay, so the fact that we failed to reach that level, the fact that we failed to reach this ascending diagonal, this puts us already in a bearish mood here, or it gives us some first signs that we might be descending from here. Okay, then we have the market reacting to this descending blue line, similar to these blue lines that we have in the past. And these blue lines many times were places where the market, well, reacted to, but finally hurdled those levels and even tested those levels from the opposite side. But we have now reacted a considerable amount here in in percentage terms and in nominal terms as well, there is a substantial retracement from that level. And this is also a hint that this is probably the new resistance that is enveloping right now the price, that this new channel that we have here in blue, that I will bold it here for you so that we see this descending structure here. Okay, so with the price going down, the natural target now is probably the 91 level. This is the level where we had this last intent of reaching higher highs. We dropped back to it and staged a second attempt to reach those highs. It failed. So the market is now falling with that message. It's falling, it's coming back from the battle without having conquered the territories that it wanted to. So it's probably going back home, right? And this home place is right now the 91. Okay, this is the new line in the sand, so to say, where the market will be divided, where traders will switch from bullish to bearish. Okay, so anything above the 91 still within this channel, or even more bullish, would be outside the channel. So if I take this would be probably anything outside this up to here, and anything outside this blue channel will be extremely bullish for the price of oil. So if you can break that descending line at any point, that will be extremely bullish, because then the market, with a breakout of this descending line, the market is telling us that it wants to conquer the high from where this line originates, and then it wants to conquer any line that goes through or originates from that level. And this line is ascending by the day, and it could reach, for instance, by later this year. You see it as it approaches then the 140.47 to be reached here later in 2026. So, but anything up above here will be very bullish. Anything below this the 91 level will be bearish territory. Now we have to pay attention to the quality of these areas, okay? Because we have this ascending support here. The stronger ones I have bolted here on the chart, because these were the ones that sustained this growth, right? November 20th, and then back here in November 21. These were the lines, this diagonal ascending support lines that sustained this move, okay? These will probably be the new targets if the 91 is lost. If the 91 is lost, we might triangulate here somehow in this area before losing that green line. This is an important, I will even bold it even more, okay? This is an important line here that will divide the whole chart, right? If we lose that level somehow, then we enter a territory that has the quality of what happened here back in 2020. So for that to happen, this is shock territory. So for that to happen, we need something that shocks the oil price so that we enter this level. We don't need to go negative again in order for the market to express and manifest this malaise that it felt here. Okay, so any shock, the market will be here, and it still would be contained within this bullish channel, this mega ascending channel. It is only losing the level that originates from that 2020 low, yeah, the pandemic-induced low here. Only losing that level will be drastically negative for the price of oil. Okay, so if we have something that brings us the market to lose that level, yeah, that would be very negative. So we would enter a very negative era in the price of oil again. Okay, but we don't want to consider that, because there is a bunch of of supports coming on the way. Okay. In our next video on oil, we'll dive into intraday charts and see how we could fine-tune our positioning within this blue descending channel, and what kind of plays we could use here around that line. This is a line that divides a bullish from a bearish stance, but this line can be blurred. That is, the market may react, might directly go here into this descending lows here, into this ascending lows, pardon, and fulminate here the horizontal support. Okay, so and it might react from this channel low up again, crossing this 91 level again to the upside. So we may blur this line. Okay, and try to start staging something that makes more sense when looked upon this descending blue channel. Okay, then we have, following with the same idea, any line that goes from here, okay, from this important level, we might use also another less steep lines than even the green ones, okay, and use another line that is parallel to this one here, connecting the lows from 2009 and 2020. And if we project that line higher, we see that it's somehow the market somehow respected this line. Okay, and if we go here, we find that somehow organized the chart. So we might also anchor this line somewhere here on that point, be it on the high side, on the low side of it. Okay, if we anchor it on the lower side, really where the breakdown was, we see that the markets reached that level here in September 18, trying to stage the same battle, right? To conquer that level and then to reach that, and it failed. As it failed, the market from here had a first signal that it was doomed to the downside. Yeah, it broke down, and then we had these two intentions here of the market even getting back to that breakdown level here, and it finally capitulated. Okay, so that line was finally conquered here last year. Okay, we had this breakout and then retested even on the lower sides, but then we had the bodies of these candles here respecting the line, and from here we had this large leg up. So this line on the downside, if we lose the 91, the market may easily try to reach that level. Okay, and then we have here for March 23 an intersection with this descending channel. Before that, we have this December this year, an intersection of this lower low here, the ascending line from this from these lows here in March, April last year. Okay, with this blue descending line, this may become an important target, an important bait for the price of oil. And in a shorter term, we have also an intersection from this same blue descending line with this important support that we had all the way up here in August. Okay, in the beginning of August, we have this target here. Now, intersections on a price chart may function two ways. They may function as a price target, so we might see the markets indeed trying to express these failed attempts to reach higher highs by resting here on this intersection, or the intersection might not be reached, in that time moment, yeah, but they might be used as a swing point. So we may see the prices swing at that time. So that's why we take that intersection as a key indicator here for any structural change in the price of oil, at least short term. Okay, so summing up here, at 123, oil staged a lower top in June compared to the 129 in March, and not only was it unable to reach a technical target in the form of ascending channel resistance, but it reacted strongly to a descending resistance, this blue line here. The 91 level is the new line in the sand that divides the bullish and the bearish territory. And then there is the fact also that a demand shock, for instance, could make the oil price enter the 91 to 70 range, this red circle that we have here, and still be bullish long term because we are still within that ascending channel. Okay, and then finally we have this August 16 as an important intersection, targeting 81, and then later in December targeting 71. Okay, so thank you so much for watching. If you enjoyed it, please make sure that you comment, like, subscribe, and if you like me to cover any specific market, please let me know in the comment section below. Until the next time, be safe.